So, Dhiraj, with this very somber understanding of the market and the background that you've stitched for our viewers, tell us what are you telling Ambit's customers? You run multi-million dollar portfolios across geographies and across Indian asset classes. Broadly, what will work? Will large caps rule for the next 2-3 years? Would you be buying smattering of mids and smalls? How will you navigate this?
So, across sectors and across market cap categories, three things that we need to focus on. One is delivery of earnings, and more importantly, predictability of the delivery of earnings. So when the environments become uncertain, investors tend to pay or markets tend to pay a significant premium to not just earnings, but predictability of earnings. So, just to illustrate in a very simple way, if there are two companies, one you can be very sure will grow at 15 or 17% earnings next year. One which could grow at 30%, but it's at risk. So the 15% predictable earnings company tends to get a better valuation in this environment. So that is point one. Second, for the last 4 or 5 years, when markets were focusing on earnings, nobody asked a question about the quality of earnings. Where is it coming from? Is it treasury income? Is it core business? Is it a one-time gain? As far as the earnings were coming, the stocks were getting rewarded. So second will be the quality of earnings. And is there free cash flow generation in the earnings, or is the entire earnings being eaten up in inventory and debtors, etc.? People had forgotten to ask those questions. Those questions will come back to the table. So predictability of earnings, quality of earnings, and third, and I think this will be the most important factor in the next 2 or 3 years, will be valuations. So again, so long as the earnings were coming through in the last few years, valuations didn't matter. For a 25% earnings growth company, markets were willing to pay 150 times trailing PE multiple. That will not happen anymore. So, if you actually think about it, it really narrows your universe, because in a number of cases where earnings are coming through, valuations are very high. In a number of cases where earnings are coming through, the predictability is very low. So if you try to do a Venn diagram and look at the intersection of all three variables, then your universe becomes very narrow. And even at least at Ambit Investment Management and Ambit Investment Advisors, this is what we believe in. This is what our forte has always been. And this is a very narrow universe that we've been focusing on. So that's what we're advising our clients.
If you like the video, do like, comment, share and subscribe.